5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Tech reassures Apple sees a blockbuster holiday season while AI powers Amazon's fastest cloud growth in years. Forging ahead in Asia, Nvidia strikes AI deals with South Korea's biggest companies. Jensen Huang saying he also hopes to sell Blackwell chips to China. And next up in earnings, big oil, Exxon and Chevron on deck later this morning. So it may have been a bit of a difficult day yesterday with the indices down a percentage point or more apiece, but still green on the week. And now look, we're back to green on the Friday. S&P futures pointed significantly higher. NASDAQ 100 futures even higher again, thanks to those tech earnings. And of course, we get big oil and some stragglers for the week today as well. Let's look at the bond universe, because it does look like that bear flattening that we saw right after the FOMC decision might be reversing itself to some extent. We have the 2-year yield at 360, the 10-year yield all the way up to almost 411, and the 30-year yield at 466. So maybe the steepening trade is back in vogue. We have about 17 basis points of cuts priced in for December now. That's down from the almost 25 basis points, obviously, right before the meeting. So lots to get through today. In the meantime, let's get to some individual equity movers. Over to London now, and Kriti Gupta. Kriti.
Bonnie, good morning. We've got to start off with the big tech names. Amazon, of course, having a blockbuster morning, higher by 12%, not only beating on their estimates, but really wowing the street. The fastest growth when it comes to their cloud unit since almost 3 years. A big story, of course, for Amazon, but it's not alone. Apple also having a very good morning. It turns out some of those worries about the tariff fears around Apple, what the read-through on the iPhone would be, not permeating just yet. 2% higher on the expectation of a very happy holiday season. I want to go to another big tech story, and that, of course, is Netflix. You are seeing a big bid here. They're announcing a 10-for-1 stock split. Also some reports that they may be considering a bid for Warner Brothers. Both shares of both Netflix and Warner Brothers Discovery higher this morning, Bonnie.
Kriti, thank you so much. Kriti Gupta there in London. And coming up this hour, we'll speak to Michael Sneed of BNP Paribas on market risks, and Joel Kulina of Wedbush on Amazon's and Apple's results. So let's dig deeper into those tech results now, with Amazon's cloud growth reaching the stars.
AWS is gaining momentum. Customers want to be running their core and AI workloads in AWS, given its stronger functionality, security, and operational performance. And the scale I see in front of us gives me significant confidence in what lies ahead.
Shares of Amazon extending its rally in double digits. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, what did analysts miss? Because this certainly was a beat.
Yeah, it was a 20% growth in their cloud business, strongest for some time, and beating expectations. You know, I think the market has been a little bit concerned that maybe Amazon's AI strategy perhaps wasn't keeping up with the pace, and that perhaps even Google and Microsoft, who are their two biggest rivals in the cloud space, were taking market share. I think what we've seen from the results is that AI strategy is more robust than perhaps people thought, and that the market in aggregate is growing more strongly than expected. So there isn't necessarily the kind of the share loss, or at least even if there is some share loss, the pie is big enough for everybody to grow at pretty good levels.
It doesn't seem like the market, at least in this case, is too concerned about spending, about AI spending, CapEx.
Yeah, that's right. I think what we're seeing here is that there's a clearer connection between the investments they're making and the revenue that's connected to that, and that revenue is coming through pretty quickly. You know, that contrasts quite significantly with what we heard from Meta earlier in the week, where they're spending big, but the incremental revenue isn't particularly so clear. And, you know, even Mark Zuckerberg being, you know, kind of fairly cavalier about, you know, we just need to invest. We're not quite sure what the revenue streams are going to be to support this, but it makes sense to invest. So I think, you know, that clarity around what the investment is going to deliver in terms of near-term revenue is being rewarded, particularly for Amazon.
Just briefly, Matt, you know, Apple initially sold off after the results, but then the call came and things look very rosy for a good holiday quarter, and also repairing the China market.
Yeah, that's right. I think people were initially a little bit spooked about the weakness in their China print. I think down about 4%. The market had been looking for a stronger print, but very optimistic and upbeat commentary around the iPhone sales for the holiday quarter in aggregate. So talking about 10 to 12% sales growth in the holiday quarter for iPhone, which is half of their revenue and the platform for everything else they do. That would be up from 6% in the September quarter, and that they even said they expect to return to growth in the China market too in the holiday period. So I think the momentum behind the iPhone product set is definitely moving in the right direction. The 17 has been a success for them in terms of the latest generation.
Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Sticking with tech, Nvidia makes its mark in South Korea.
We will build 250,000 more GPUs here in Korea, making Korea one of the largest GPU or AI infrastructure countries in the world. And then finally, it's really vital that we build the ecosystem, not just the AI infrastructure of Korea, but the ecosystem of Korea.
Joining us now from Gyeongju in South Korea, where the summit is taking place, is Bloomberg's Stephen Engel. So this was to APEC CEOs, Stephen, and it just happened in the last few hours. Jensen Huang making all sorts of partnerships.
Yeah, that's right. So they kind of teased it last night when Jensen Huang went out and had chicken and beer before all the world's cameras that are here at the APEC, along with J.Y. Lee of Samsung, the executive chairman, as well as the executive chairman of Hyundai Motor. And they sort of teased that big announcements were going to be coming today. And within the last couple of hours, including just the last 20 minutes or so where he had a media scrum, Jensen Huang announced that they are going to be doing this big deal with a number of the biggest companies in South Korea, including Samsung Electronics, including the SK Group, which of course has SK Telecom and SK Hynix, and as well Hyundai Motor for some autonomous driving and some other AI-driven manufacturing. Samsung Electronics, which, by the way, separately, has also been trying and not tremendously successful to build out its foundry business to rival the likes of TSMC. They are going to be working together with Nvidia for foundry business for those HBM4 chips, but also going to essentially be building an AI factory. And again, this is all intended to kickstart AI and the AI infrastructure and projects throughout South Korea. So again, this has taken on increased impetus because of Nvidia essentially being shut out from the China market. So South Korea obviously is a tech hub in Asia and part of the supply chain of advanced electronics. Samsung is about 50% of the Kospi index. It's a huge player, so teaming up with them makes sense.
Yeah, absolutely. Now, you mentioned China. One of the burning questions, obviously, was what happens to Nvidia's Blackwell chips? Did we hear any more about that?
Well, yeah, of course, yesterday or 2 days ago, it was Donald Trump who essentially said those Blackwell chips, those most advanced AI accelerators, could potentially be on the table in negotiations, final stretch negotiations with Xi Jinping to secure that trade truce. It ended up not materializing. They did talk about Nvidia products, but did not talk specifically about Blackwell. When asked about that today, Jensen Huang says, of course, he still would want to sell the most advanced chips, the Blackwell architecture, into China. You'll have to wait and see, though. Like H20, which is widely considered to be more of the watered-down version of Blackwell, was given export licenses to go into China by the U.S., but it was China that rejected it on national security concerns. Yes. But again, no doubt, with Jensen Huang saying they're in an awkward position right now because of export controls, they would want to sell Blackwell into China.
Of course. Stephen, thank you so much. That is Bloomberg's Stephen Engel there for us. Turning to pharma, Pfizer now has 4 days to make a better deal than Novo Nordisk to acquire obesity drug maker Metsera. Let's get more from Bloomberg's Ashley Furlong. Ashley, Pfizer was one of the original 7 bidders for Metsera. Why is Metsera so in demand?
If you're a drug maker today, you all need to get into obesity space. So we've seen with Pfizer, this is really critical. You know, they have sort of dropped 60% from their post-COVID highs. Albert Bourla, the CEO, is under a lot of pressure to prove to investors that they have the pipeline. Metsera was going to sort of offer them a big in into that obesity space. For Novo, what we've seen is there's concern about the pipeline of the next generation obesity drugs, and this would really help boost that. Investors are also questioning potentially if Novo might be overpaying. Already they have obviously a significant obesity pipeline, and there's concern that they might be overpaying with this enhanced bid in the effort to sort of push Pfizer out of the way.
Yeah, I mean, it's a cracking story, a cracking corporate story, because Pfizer had struck that $5 billion deal, and now it's in a position where, you know, the rug could be pulled out from under them. At this stage, who is the favorite to win?
If Pfizer is able to offer a better offer than Novo, I think analysts think that it has a fighting chance. But at the moment, Pfizer is really taking an extremely aggressive approach, sort of citing anti-competitive behavior, pointing to the fact that both Pfizer and Metsera are American companies, and, you know, sort of almost making an overture to Trump to sort of step in there. So there is, if they sort of go that route, it's less clear if they'll be able to accurately fight Novo, and if they don't actually offer a better deal.
Ashley, we will wait with bated breath. That is Ashley Furlong there. Thank you. Now to other top stories trending on the terminal this morning. Millennium Management is raising $5 billion in a new fund to invest in private market opportunities. The new venture, named Millennium Opportunities Fund, marks a shift for the firm and will mainly focus on relatively less liquid corporate and asset-backed debt. The Trump administration is pushing for a global internet free of import duties and other surcharges to maintain the US's surplus in trade in services. The government has received assurances from Malaysia, Cambodia and Thailand that they will not impose digital services taxes or discriminate against American providers of e-commerce and other online services. And China's factory activity slumped for the longest streak now in more than 9 years. That's prompting fresh calls for greater policy support. The official manufacturing PMI fell to 49 in October. Coming up, we speak to Michael Sneed of BNP Paribas on why he's staying pro-risk. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Michael Sneed of BNP Paribas says risk-seeking behaviour in this market is far from appearing extreme, though investors should expect choppier markets. He writes this: "We would expect markets to place greater emphasis on the limited data from the US, which will likely result in higher volatility, not high enough to dent our pro-risk view." Michael joins us now. He's head of cross-asset and macro-quant strategy at BNP Paribas. So, Michael, I'm excited to hear what signals exactly you are seeing that would keep you pro-risk this market.
Hi, good morning. So I think what really stands out at the moment is that there's not one unique signal that's saying be pro-risk. There's a whole range of signals. So maybe let me spend a few moments and talk you through that. So one is that you could say in this backdrop where US data is kind of looking a little bit weaker, the data that we do have, that it's a little bit odd to then be pro-risk. But one of the things that we do is we can search across what's really most important for the market. And we see two key factors that are important for the risk factor. Is firstly earnings expectations, and the secondly is the performance of credit. Now, this latter has had a little bit of a knock recently, but we continue to have a positive view here and think actually credit spreads could tighten. And on the earnings side, as we're seeing at the moment, the earnings reports are generally delivering above expectations. You're seeing earnings expectations for 2026 being revised higher, and that is supportive for risk.
At the same time, when we saw just a little bit of disappointment yesterday, the market sold off big. This wasn't just a reaction to the Fed, it was also an earnings reaction, Michael. Is that where you're seeing the volatility come in then?
Yeah, so I think there's a new dynamic that's kind of been entered after the FOMC. So going into the Fed, expectations were that the Fed would largely be delivering a rate cut at this meeting and the one in December. And the rhetoric from the Fed really kind of opens the door to kind of questioning that December rate cut. And particularly at a time where we'll now be out of the Fed blackout period, we're going to have more Fed speakers and more kind of news flow for the market to digest over the coming weeks. And so this kind of adds a bit of, two-way price action, two-way thinking about whether or not the Fed can deliver that December rate cut. We think that they they will be delivering the rate cut. But what you'll likely see is kind of more volatility come to the market as you get this commentary coming from Fed officials.
So
they're also likely, please.
Well, I was just going to move on and talk to you about a point that BTIG was making, that on Wednesday we saw 9% of S&P 500 companies make a 52-week low, and that's the most since April. And by 52-week low, that's even lower than the April lows. And BTIG is suggesting that this is an ominous signal. So in spite of what you're seeing, there are also other signals out there that are ominous, no?
So I think this really comes down to the kind of bifurcation of the global economy. You have sectors that are doing very well, so particularly AI-related sectors that are having this kind of investment into the sector. But then you're also having other kind of more classic industries which are facing a backdrop of slightly subdued economic activity, more struggles with consumer confidence, and a slightly soft labor market. In aggregate, however, when we think about kind of market cap weighted stock indices, we think that these can continue to rise. And I'd say there's kind of three reasons behind this briefly. So one is investor sentiment is not really appearing stretched at the moment. The second is positioning actually looks quite moderate. And the third is actually aggregate kind of valuations for the stock indices. Stock indices like the S&P, while it's kind of continues to push all-time highs, does actually look slightly cheap on our short-term valuation measures.
Well, to this market then, giving out those signals, does it matter that we're in day 31 of a US government shutdown, and it looks very likely will continue into November, and that those SNAP payments, those $8 billion, won't go out to all those families in need?
So again, that kind of adds to this bifurcation theme of the market, that you have the market focusing on the kind of aggregate indicators and trading stocks and bonds off those. But at a disaggregated level, you're right, Bonnie, there are stories of sectors, parts of the economy, individuals that are doing well, sectors, part of the economies that are seeing more of that challenge.
So, Michael, when it comes to the bond universe then, are we back into looking at a curve steepening trade? Is that back in vogue? Matt Hornback of Morgan Stanley sticking with it, even while some others moved away from it. And indeed, we did see some bear flattening after the FOMC meeting.
So we think we could see steepening from here. We generally see that duration does look a little bit vulnerable here, really as a hangover from the fact that duration has been a good trade throughout most of October. If we do continue to see a pro-risk backdrop, that is likely to be leading to duration partly selling off as you get a rotation out of bonds and into equities. So we'll probably still see within the ranges that we've had this year, but we could see some duration weakness over the coming weeks.
What about the trend that we've been seeing in gold? We're back above 4,000 today, though, just barely. And I wonder what your signals have been telling you as to whether it was a safe haven play or, you know, maybe central banks are buying the dip that we saw in the last few days again?
So in our framework, where we focus a lot on valuations and positioning, this had been really flagging earlier in October that valuations were very stretched and positioning was very crowded. We've seen that the retracement of gold basically brings us back in line with the fair value that you would expect based on where things like real yields and the dollar and inflation expectations are trading. We think going forward, this is likely to give an opportunity for gold to form a bit of a base and then to re-attract those buyers that see gold because of its favor gold, because of its safe haven status, and also those central bank buying flows.
You know, I'm looking at the MOVE index, Michael, and it's down to, I mean, multi-year lows. We have a VIX at about 16. Are they appropriate levels?
So this is where we think that the vol could start to rise, particularly as you get the market focusing more on the limited data that we have from the US against the context of the FOMC speakers that we'll likely have over the coming weeks. And then as we hopefully move to a period where the US can exit its government shutdown, then that would likely be a slightly vol-inducing event as the market prices in that we'll be getting more news flow.
All right. I guess something to look forward to maybe for the rest of the year. Michael, thank you so much for joining us today. That is Michael Sneed of BNP Paribas. Coming up, a look at what else is making your headlines in your front page news. That's next. This is Bloomberg. This is It's Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting the Trump administration is considering striking targets inside Venezuela, including military facilities it's identified that are used to smuggle drugs. The escalation would pressure President Nicolas Maduro to step down. Sources telling the Journal no final decision has been made. Next up, the Washington Post reporting classified reporting by the State Department's watchdog found that Israeli military units committed, quote, many hundreds of potential violations of U.S. human rights law in the Gaza Strip. U.S. officials telling the Post the report's findings would take the State Department multiple years to review. And on the front page of the New York Times, the Trump administration yesterday staunchly defending its decision to stop paying food stamps during the government shutdown. It argued it could not tap a tranche of available funds to provide aid to millions of poor Americans in November. The Times reports the judge appeared frustrated and confounded at times and promised to rule soon on a lawsuit filed by roughly 24 states. And that's where we are on this day 31 of a government shutdown. But it is earnings the market is focused on, and in particular Apple and Amazon after the bell yesterday. And as you can see, we have futures pointed higher, a dollar index that is not really doing much, and a 10-year yield that is quite happy to hang out, having made that move after the FOMC. So we're about 10 basis points higher for the long end in particular of the curve, that curve steepening trade back in vogue. Coming up, Nvidia's landmark AI deals. CEO Jensen Huang announcing big partnerships at the APEC CEO Summit. We'll have more on that next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Tech reassures Apple sees a blockbuster holiday season while AI powers Amazon's fastest cloud growth in years. Forging ahead in Asia, Nvidia strikes AI deals with South Korea's biggest companies. Jensen Huang says he also hopes to sell Blackwell chips to China. And next up in earnings, big oil, Exxon and Chevron on deck later this morning. So let's take a look at those futures because they are pointed firmly higher, particularly those Nasdaq 100 futures after a down day yesterday. That index was down 1.5%. Both indexes, though, still very much in the green for the week, even before today. We'll see how Apple and Amazon earnings lift market spirits. Now, I do want to point to the fact that this is day 31 of the U.S. government shutdown. In 5 days, it's going to be the longest shutdown in history. SNAP benefits will not be deployed in November, as far as we can tell right now. That's $8 billion worth not going out. And RBC saying today the full impact could actually be bigger than initially expected, especially if this drags through December. In fact, it could drag perhaps as much as 3 percentage points off Q4 GDP in that case. Looking at bonds, we are seeing that curve steepening again and a bit of a pricing out of a full cut in December. So we have about 17 basis points of easing priced in now for December. That 10-year yield just above 4.10. Let's get to some individual movers now. Over to London and Kriti Gupta. Kriti.
Good morning, Bonnie. Let's start with the tech space. You hit it there. It's an earnings story that continues to power these shares higher. Amazon higher by 12.5% this morning. Not only did they beat their estimates when it comes to their cloud division, but they also beat it by their best and strongest growth in almost 3 years. So the shares really being rewarded. Even though going into it, there were some questions about the sustainability of that growth. Amazon shares, of course, higher by 12.5%. It's not the only tech story on the move. Apple, of course, very much in focus as well. Those shares higher by almost 2%. It's not necessarily their China reemergence that's getting investors excited. It has more to do with a very happy holiday season that they are pledging. They're expecting iPhone sales to go off the shelves. Those shares higher by 2% on that sales forecast. And lastly, let's talk about Netflix here because, of course, they came out talking about a 10-for-1 stock split, really to benefit some of their employees that are holders of those shares. There's also some reports, especially from Reuters, coming out that they may be entertaining a potential bid for Warner Brothers Discovery, which, of course, is up for sale. Both Netflix and Warner Brothers up by about 3%, Bonnie.
All right, Kriti, thank you so much. That is Kriti Gupta there. So let's stay with those tech results. Amazon's cloud unit posting its strongest growth rate since 2022.
AWS is gaining momentum. Customers want to be running their core and AI workloads in AWS, given its stronger functionality, security, and operational performance. And the scale I see in front of us gives me significant confidence in what lies ahead.
Shares of Amazon, as you can see, up more than 12% in the pre-market. Joining us now is Joel Kulina, Managing Director of Tech, Media and Telecom Trading at Wedbush. Joel, is this just luck on the part of Amazon? Nobody seems to expect this kind of growth, and yet AWS came through again when Amazon most needed it.
Yeah, and good morning. Thanks for having me. Yeah, you heard a little clip there. Jassy sounded great on the call, and not even arguably, almost by landslide. Amazon was by far the most debated amongst the top 5 coming into the CPS cycle. Stock was down 4 to 5 weeks, was up low single digits for the year. And there just was a lot of concern that AWS was losing market share in mind share when it comes to AI workloads. And I think the AWS reacceleration last night kind of just is refuting that narrative. And it's sort of game on for Jassy and company. And again, positioning was very lean here, which you haven't been able to say that in the past kind of 4 to 5 quarters. And so the setup was great. Stock's breaking out above 240. And I struggle to see why the stock doesn't work from here. Clearly, I think this moves an element of catch-up as well, just giving its massive underperformance of late.
Yeah, for sure. Is this sustainable over the coming quarters, Joel?
Yeah, I mean, if you take Jassy for what he's saying, it sounds like it is. They're investing CapEx in the right areas. I think they added about 3.8 gigawatts of capacity as well to handle all the AI inference and workloads. So they got their game back on track. And to me, when the narrative shifts positively and people have been underweight, especially amongst the global long-only community, it tends to work for at least the near medium term, which means, for me, 2 to 3 months.
What should Amazon do with its extra cash at this point, Joel? Is there a part of the business that it should be investing in?
Right now, it's all about AWS and AI. That's what's moving the needle in the stock price. That's what investors and shareholders want to see. Thankfully, other parts of the business are performing well. Online retail and advertising performed very robustly as well in the quarter. But again, people want to see the money in CapEx going back into the AI side of the business. And that's what's going to move the needle for the stock and obviously drive the multiple higher.
All right, let's move to Apple, because that was another interesting one that I'm not sure the street was expecting. You say that, for the first time in a long time, actually, there's a bullish narrative now around Apple, and it's deserved. Is that all because of the iPhone? It's finally selling again?
I think it's definitely the big part of this narrative, and I say that sort of tongue in cheek, but before the iPhone 17 launched, 6, 7 weeks ago, Apple was just left for dead. Nobody wanted to talk about it, never came up in conversations. But then checks started coming out, they've been improving. And now you can kind of look into 26 as well. And you have 3 product cycles. You have the Vision Pro 2 is going to launch, the next foldable iPhone as well. And we'll see what they do in terms of advanced Siri when we get kind of hopefully more granularity and color around that next spring. But again, there's actually stuff to talk about here with Apple, which is kind of sexy again. And right now, AI has been priced at 0 in the stock. So I view that as a call option. And again, nobody owns it. And to me, that's the top of the bull case right there. It's the least owned name amongst the mega cap tech by a mile.
Yeah, it's only up 8%. I say only. And, in another year, 8% would be great, right? But this year, 8% may not be so good. That's before today's move, I should add. So just in general, for the TMT outlook, Joel, you got your eye across all of these stocks. Have we seen a good quarter? Are you bullish going into coming quarters about these types of stocks?
Yeah, I think tech it's a little bit more bifurcated and a lot more dispersion under the hood. I think tech investors have clearly made their bets. You have your AI winner bucket and then your AI losers. And what we do know about tech investors historically, if you're a perceived loser, your multiple is going to get hammered. And that's what we're seeing. We've been seeing in the large cap software space, or names say like Duolingo or kind of Salesforce has been languishing at the bottom. Names like SAP, Adobe, Figma, and then even going to internet, Instacart, Trade Desk. There is just no appetite to really invest any stories with hair on it. So that to me is the biggest kind of talking point in tech right now. Stick with your horses that have gotten you here. And again, there's just really the classic buyers are higher. just not seeing any willingness to kind of step in to catch falling knives. IT services, jumps out in that bucket as well, with given their exposure to federal and Doge and whatnot. So stick with your winners, yeah.
Then I have to ask about Netflix. I don't know if you're comfortable talking about it, but we're going to get this stock split. It's done pretty well, up 22% year to date, and now it might actually be looking at bidding for that studio. I mean, is that a good idea?
Yeah, I mean, it was kind of kicked around on their call. It wasn't completely dismissed that they would take a look at Warner Brothers. So I don't think this will throw too many people, off guard. And the 10-for-1 split, historically, retail loves it. Psychology, for whatever reason, it really doesn't make a difference. But it always tends to have a positive impact on share price. To me, Netflix is a little bit of an unexciting story right now. We know they're the king of streaming. They still have a very robust content slate ahead. But again, looking at their last print, there just really wasn't anything in there to get too excited about. So I don't think M&A hurts the near-term narrative. But again, I don't think it's major consolidation. I don't think it's what investors want to see either. Just given it's a lot of money, a lot of uncertainty. So we'll see how kind of this plays out.
Joel, thank you so much for orienting us today in this environment after all of those earnings reports yesterday. That's Joel Kulina of Wedbush Securities. U.S. oil majors ExxonMobil and Chevron reporting today, both expected to press ahead with plans to accelerate production growth despite weak crude prices and higher supplies from OPEC and its allies. For more, joining us now is Vincent Piazza, senior analyst at Bloomberg Intelligence. So Vince, two companies, two different trajectories. How should investors be thinking about the results and particularly their outlooks?
Good morning, Bonnie. Thanks for having me on again. So I think for Exxon in 3Q, there's a bit more clarity with results. So the downstream margins for the energy products, chemical products, specialty products, margins will probably add about another $1 billion of incremental profit there relative to the prior quarter. But that'll all get diluted from upstream prices and also restructuring costs. Maintenance costs and restructuring costs, which will probably add up in total to somewhere around $1.3 billion. But what's interesting is free cash flow should really spike up in 3Q, somewhere north of $8.5 billion. We should get some clarity on the buybacks and the dividend strategy. We have clarity through 2030, really, for Exxon. Their plans are to spend roughly $20 billion on buybacks per year. CapEx somewhere between 28 and 33 billion per year out to 2030. And obviously the production cadence, as you mentioned, roughly 4.7 million barrels per day in 3Q, and that should run closer to 5.4 million in 2030, by 2030. For Chevron, though, Bonnie, different trajectory. We don't expect a great deal of insight about forward outlook or spending or distributions on the 3Q call, because on November 12th, they'll offer their broader views at their investor day. What we do know is you'll likely see a little bit of noise in 3Q because Hess closed on July 18th. So roughly half of the cash outflows for severance and also for other transaction-related costs, roughly about $400 million. That'll likely hit for 3Q. But for the longer-term trajectory, we will get some additional insight on the November 12th call. So I wouldn't hold your breath on anything major coming out.
Yeah, and it's a bit of a caretaker quarter as well for them, as you say. So the results, what about the upstream space? Will they give us any takeaways, do you think, Vince?
Oh. Yes, absolutely. I think they are the telltale for what's happening in the U.S. Upstream. Obviously, most of the group will be hit with pricing issues because benchmarks, WTI, are relatively off year to date. Also, nat gas had a pretty tough go of it for a while, but that seems to be rounding back ahead of the winter season. So it's really tough for these guys to grow production overall when we're sitting here below 60 on WTI, with investors calling for shareholder distributions in terms of dividends and in terms of share buybacks. So for the most part, we're looking for capital discipline more broadly and the return of excess cash.
All right, Vince, thank you so much. Looking forward to those results. That is Vincent Piazza of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Millennium Management is raising $5 billion in a new fund to invest in private market opportunities. The new venture, named Millennium Opportunities Fund, marks a shift for the firm and will mainly focus on relatively less liquid corporate and asset-backed debt. Pfizer has 4 business days to offer a better deal than Novo Nordisk's bid for Metsera, or walk away. Novo Nordisk is offering at least $6.5 billion to Metsera shareholders, with the possibility of the price rising to $9 billion if certain targets are met. And China's factory activity slumped for the longest streak now in more than 9 years. That's prompting fresh calls for greater policy support. The official manufacturing PMI fell to 49 in October. This is Bloomberg.
We will build 250,000 more GPUs here in Korea, making Korea one of the largest GPU or AI infrastructure countries in the world. And then finally, it's really vital that we build the ecosystem, not just the AI infrastructure of Korea, but the ecosystem of Korea.
Nvidia forging AI deals with South Korea's biggest for Samsung, Hyundai, and SK. Back with us for more now is Matt Bloxham of Bloomberg Intelligence. What are these deals made of, Matt? What are the details?
Yeah, they're kind of bilateral deals. I mean, obviously, Samsung is an important memory chip provider into the Nvidia GPU system, so it's kind of extending that partnership, but it's also kind of reversing back into Samsung as well, and them building out their own AI capabilities for their business, which will, not surprisingly, rely heavily on Nvidia chips. So, kind of an element of circularity there, but, kind of a mutually beneficial partnership moving on to the next stage. It's a similar situation with Hyundai too. And I think, what we're seeing here from Nvidia is a very smart strategy that we're still given the relatively early stages of the AI future, and they are embedding themselves into as many industries as they can, because I think if you're an early technology provider, then it becomes very difficult for companies to kind of unpick and unwind those relationships to bring in other technology. And as we know, there's lots of other players, both from the US and from China, developing rival AI accelerators. So it's important that they kind of develop those strong partnerships at an early stage to minimize the market share threat further down the line. Yeah,
it is fascinating. I mean, is Jensen Huang able to do this with restrictions? So, for example, are these more than just gentlemen's agreements, so-called? Are they, binding?
Yeah, I mean, these look, I mean, at least on the face of it, beyond just kind of gentlemen's agreements, these are clearly kind of binding partnerships to work with each other. So definitely stronger than, just kind of verbal agreements. These are strong statements of intent.
And as you say, switching costs down the road might be, extraordinary, so that might never happen. Just very briefly, the Blackwell chip, do we have any update on whether that might be actually going to China or not anymore?
No, we're still waiting on that. Obviously, Donald Trump gave a kind of tantalizing kind of glimpse of what might happen, but from Jensen Huang saying that there's no kind of news on that. But that he would like to sell those chips into the China market, and that all of the kind of guidance and optimism they've given excludes that. So still very much positioning as China as a bonus on top of what's already quite a rosy outlook, at least for the next year or so.
All right, Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence there. Chinese President Xi Jinping and Japanese Prime Minister Sanae Takaichi wrapped up talks at the APEC summit that span from trade to security. For more on the implications for the US, Bloomberg's John Harney joins us now from Washington. So, John, what do we know about the premiers Xi and Sanae Takaichi meeting just in the last few hours, and what they agreed upon?
Well, this is their first meeting since she became prime minister. It shows a few things. Most important, that even though she had a apparently successful meeting with Donald Trump and his very recent visit to Asia, Japan must strike a balancing act. While the United States still, after all these decades, provides security guarantees to Japan, China is Japan's largest trading partner. So they really have to have the best relations they can with both superpowers.
Yeah, absolutely, and such a winding relationship, that one. Moving to this US-led digital economy that President Trump is pushing for, he wants, an internet that's free of tariffs, and he's got some countries to agree in Southeast Asia. It's not going to go too well with the Europeans, though.
Probably not. I mean, there's certainly like a lot of the president's the president's initiatives, the president's ideas. There's much fine, or not even fine print. There's more like ideas and actual policy. So, like much else of what he says, we'll have to see how this turns out.
John, just briefly on the government shutdown, we're into day 31 now. I believe 35 was the longest ever, so we're very close to the longest ever shutdown. What do we know about whether troops are going to get paid and whether those SNAP payments are going to go out from tomorrow onwards?
Yeah, that's right. I mean, tomorrow, for the first time, people who have in the SNAP program, or also known as food stamps, will be unable to get benefits, and many government employees are still not being paid now. For the military, apparently there will be funds to at least this pay period. They'll get their paychecks, but no solution is in the offing, and for a very good reason. The House is still out. Speaker Mike Johnson said he's not, he saw no reason to bring his members back because they approved the so-called continuing resolution, a short-term funding measure, which, by the way, expires November 17th. So even if they came up with a solution today, they'd be back again in about 2.5 weeks. And the Senate is gone too for the long Halloween weekend.
Yeah, and President Trump's latest idea that we just saw there is that the GOP should ditch the filibuster over this shutdown stalemate. We'll continue to follow. John, thank you so much. Bloomberg's John Harney. And coming up, we're going to get you set up for your trading day. We'll have Fed speak, of all things, and earnings. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Exxon and Chevron reporting earnings before the bell. Plus, we're going to get lots of Fed speak. We'll hear from Laurie Logan, Beth Hammack and Raphael Bostic throughout the day. And I'm very invested in this one. On Sunday, we turn the clocks back an hour in the US. Daylight savings coming to an end. So make sure you make those clocks say 5 o'clock on Monday morning. All right, let's take a look at some pre-market movers. Amazon's cloud unit posted the fastest growth in 3 years on that AI push. So obviously you can see investors are rewarding that stock. Also Western Digital extending gains after it gave an upbeat forecast. And then Coinbase up more than 4.6% now. Third quarter revenue beat estimates. Bitcoin also higher this morning. And of course that stock was down 5.7% in yesterday's session. So it's just making up for those losses. Let's take a look at the macro climate because we had a down day yesterday. Doesn't look like it's going to be a down day today with NASDAQ 100 futures pointed very much higher. They are off their highs of the morning though. You wouldn't think there was much going on, but the yen is above 154 today, and we're also seeing the Canadian dollar above 140. So quite the move in several different currencies, but not so much the index itself. And then that move that we saw after the FOMC has held. We are higher on the 10-year yield. That is it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.